Hello, and welcome to another episode of the Awesome in Seattle podcast. This is your host, Christian Nossum with the Awesome Nossum Group. We are a group of Seattle area real estate agents. We say area because we don't only do Seattle, we do all over. Today's episode is in response to questions and conversations that we've been having a ton over the last really 6 months, 8 months, something like that. And that question is, should I wait to buy? What is the cost of waiting? Should I do something sooner than later? Like, these are all the same question that we're getting over and over, rehashed in different phrases, but that's essentially what we're trying to answer today. So when we start to hear the same question over and over again, we realize, you know what? We need a podcast about this, because I bet they're not the only ones thinking this. So you will see and you will hear today numerous the big three that we kind of always hear from people are, I'm going to save for a larger down payment. I'm waiting for prices to drop, and I'm waiting for interest rates to drop. So those are the big three that we're going to cover today. So because we're talking about rates, I bring in the man, the myth, the legend, Mr. Dan Keller, New American Funding.
Wow.
What's your MLO number? Just because we might talk about rates.
Yeah, mortgage advisor, 16-year veteran, mortgage advisor. My MLO number is 115349, just so we can stay in compliance. Niner. Chicken diner.
All right. So the reason we have Dan on again is because we are going to talk about rates. But the first thing I want to talk about is really the biggest myth in real estate. We have a whole podcast episode about this. It is called The Biggest Myth in Real Estate. You don't need a 20% down payment. And that is the thing. Most people, the most average down payment, we say this every month in our beers and home buying class, is that you have to have that 20%. And the average down payment is actually 5 to 7%. And that's for all home buyers.
Yeah.
That's not just the first-time home buyer. That's all home buyers. 5 to 7% is that average down payment for the Seattle area. Yeah. So saving up for that 20% down payment, it's tough. Like when the average home price right now is I just had it up. Almost $825,000 in Seattle. It's tough to save 20%. So it makes sense why a lot of people do a lower down payment. Now, when you have a lower down payment, you do have to pay mortgage insurance, PMI, private mortgage insurance. We can talk about that in a second. That's not a big deal. That shouldn't stop you from buying because it's really not that much. So, Dan, when it comes to advising people about saving for that large down payment or not, how are you having that discussion with people?
The savings part of it is, it's always, mom and dad told me that we needed a 20% down. Yes. So a lot of the time it's information that's outdated, right? So, or not information, advice that's outdated. Yeah. So that's the first thing I talk about. Yeah. PMI, when your parents purchased, let's say in the 90s or in the 2000s, mythically speaking, it's expensive. For example, in the past with FHA loans or with lower credit score borrowers, PMI is expensive. The report that we're going to discuss here in a minute, I based it off of a $950,000 purchase with 10% down, so just a little bit more than 7. So right under $100,000 for your down payment. Your PMI is only $120 a month.
Yeah.
Right. And so what you and I talk about at homebuyer classes is you're looking to save up more money, maybe waiting a year or two to save $120 a month, but in the meantime, that house has gone up 6, 7, 8, 9, 10, or in the past 20% or more. Yeah, so you've lost out on $100,000 to $200,000 in appreciation to save $120 a month.
Yeah, that doesn't make any sense.
Yeah, that's another reason why it's really important. Mom and dad are great, grandma and grandpa are great, but when you sit down with a real estate professional and a lender that you trust, that can give you really good advice, they can give you numbers like we're going to talk about today, and you look at those numbers, you can make more of an educated decision.
Exactly. It really doesn't make a lot of sense generally to wait to save that larger down payment. Yeah. If you are thinking that you need to and you really want to see the numbers, chat with Dan. It's totally free. He can sit down, have a one-on-one conversation, either over Zoom, a phone call, email. Like, it could just be as simple as that. Yeah. And you can just show him the numbers. Like, the numbers don't lie. It is what it is.
Remember that beers and home buying class we taught? It was probably a year or so ago, and an attendee came back from 2 or 3 years before, and she raised her hand at the very end, and she was like, "Oh my God, I went to your class 3 years ago. My mom and dad told me not to buy. The same house I want right now is $325,000 more."
Yeah.
and they told me to wait to save up more for down payment. She was like, screw it. I'm listening to you guys. I'm going to go buy.
Yeah.
Remember that?
Yeah.
So it's advice that people are getting right now, and it's not good advice.
No. It's the same thing that we've heard for years at this point, but yeah, it's not great advice. All right, the second thing that people talk about is they're waiting for prices to drop. While that did happen last year, the second half of last year, that also kind of happens every single year. Prices do this. They fluctuate every single year. It's like a heartbeat on one of those heartbeat monitors. I don't know what that's called. I'm not a doctor, but it kind of looks like that. That'll do-do, do-do, do-do.
Heart rate monitor?
Yeah. Prices did, like I said, drop slightly at the end of last year. But like I said, they generally do that every single year. The thing is, most of the time, home prices are going up. They're doing that price drop, but the overall trajectory of prices is going up. That's no different this year. So between just March and May, which May is the earliest stats or the latest stats, I guess, that we still have. June stats are still coming out. They're not 100% accurate yet. So the stats that I'm going to use is from March of 2023 to May of 2023. Home prices in Seattle. Now, again, we work all over the Seattle area, but I got to confine it to something. So I always do home prices in Seattle. The median sale price went from $750 in March, which was the lowest it had been in a year, and they went up to $823,750. So it went within 2 months. It went up $73,750 in 2 months. That's called a hockey stick. That's how quick the market in the Seattle area is recovering right now from those lower prices of the second half of last year. That I don't think is slowing down anytime soon. I just had a listing last week where during 2 open houses, a total of 4 hours for 2 days, 2 hours for each open house, we had over 150 people through that house. Over 150. We had 7 offers on the house, and it sold for $200,000 over the asking price with no contingencies. That's what's happening sometimes in this market. So there are buyers out there. Prices are increasing. One interesting article that just came out. Seattle is the fastest growing city nationwide right now. Our population is growing faster than anywhere else. And that's saying something. Like, people keep thinking Seattle's dying and no one wants to live here and all this stuff. It's just not true. The data is showing that Seattle is one of the fastest, it actually is the fastest growing city at the moment, which shocked me. I mean, I knew that there's still people moving here for work. I know, obviously, on the flip side, Amazon, Facebook, Google, they are starting to lay some people off, and they have laid off numerous people already. That's not all based in Seattle. Just because they have big presences here does not mean that they're all getting laid off.
I posted something on Instagram a month or two ago when everyone was talking about the layoffs, and so we took the total of the numbers that that the big tech companies are laying off, and most of them were less than 8% of the total layoffs came actually out of the Seattle. It was like 8 to like 12%. So
of the total number.
You can't always believe the headlines of the total numbers.
Exactly. Another reason why we just don't see prices dropping is we have such low supply. If it's not historically record low numbers, it's got to be right there, because since 2006, when we have stats that go back, it's showing that there is no supply compared to what we've had in the past.
And that's helping prop up home values too.
Home values are going up because of that, because buyers, there's a lot of buyers. I mean, how many buyers do you have pre-approved, ready to go?
I said something the other day on a podcast that typically we always have, and I've been doing this for 16 years, so I have a really good data pool. So typically we always have about a dozen to 20 fully underwritten pre-approved buyers in the queue out shopping, right? We have over 48 right now.
Jeez.
So if you take that, what is that, 4X?
Yeah.
These are, I call it babysitting right now. It's hard, and you're babysitting emotions too. So I'm kind of almost turning into a therapist.
Yeah. That's kind of our job half the time.
This podcast is going to be good. I'm going to share it with all of them, because we're hammering out the 3 or 4 main bullet points of conversations I'm having with all of them right now. So a lot of buildup, because there's just not a lot of supply out there.
Yeah, there's no supply, and that's creating competition. Home prices are increasing because of that. I mean, that's just what's happening. The other thing, we have low unemployment. I mean, again, the news headlines are saying there's a lot of layoffs. There are layoffs happening, but we still have a lot of jobs available as well, especially with AI. There's a ton of AI jobs available right now. Those 3 companies, Google, Microsoft, and Amazon are trying to be at the forefront of that. And they are hiring any and everyone that knows what they're doing in that regard to be the leader.
Yeah.
Because that's like the next social media company. That's like the next, before that, internet.
Sure.
Like they're trying to be at the forefront of that.
Yep.
Because it's another revolution.
Yeah. I'm sure you've heard this with clients that you have and friends that you have that are in tech. The ones that have gotten laid off, they're getting rehired very quickly at other tech companies.
Exactly.
And so it's not like it's like tech's going away. Like back in the day, Boeing, when Boeing laid you off, you were screwed. You were moving to another town or a city.
There wasn't another Boeing to hire you.
Yeah. So these people, yes, although some people are getting laid off, they're finding jobs rather quickly and getting rehired. So
that's exactly what I'm hearing. Or they're getting laid off from their contractor position and they're actually getting hired by the actual company versus the contractor, or vice versa, where Amazon might lay them off, but the contractor is rehiring them for the same thing because it's a little cheaper for Amazon. So that's kind of what's going on. They're shuffling some stuff. All right. So we talked about 2 of the 3. We talked about you don't need to save for a down payment, because we are hearing that a lot. We talked about waiting for prices to drop, which kind of dispelled that as well. The third thing is the biggest one that we're hearing, and that is waiting for rates to drop.
Yeah.
Now, this is your arena. This is your ball game. So let's talk about this. Does it make sense? And I know that you have some data that you want to show, so we'll put that on the screen. But does it make sense for people to wait? And how does the math line up for that?
Yeah, so this is a conversation, Christian, that you and I have had for the last 13 years with people. Is now a good time to buy, or should we wait? It's just different criteria, right? So before we were like, buy now because rates are low and home values are going up. So buy now so you can lock in your low rate and lock in your price.
Exactly.
And we were spot on correct for the last dozen years, right? The same holds true right now with the curveball that's getting kind of thrown at us is these high interest rates.
Because of inflation.
Because of the $5 trillion that the U.S. put into the economy during 2020, 2021.
Print a whole bunch of money. And
ton of money. And it takes a while for that money to get out of the economy, to circulate through and then get flushed out. It still isn't fully flushed out. And so what the Fed does is they go in and they raise the Fed rate to slow the economy down, to make it tougher for people to finance stuff or to buy stuff or more expensive. And then a couple of the little curveballs have been the supply chain issues and stuff like that. It's working some of the kinks out there, but what's the driving factor for these high interest rates is inflation, okay? And so we've talked about this before on your podcast. I talk about this a lot on social media, that mortgage rates right now are tied to inflation. As inflation starts to come down, so will mortgage rates. What is going to cause inflation to come down? It's the rising Fed rate. I put a chart, and I'll share this with all of you guys. We can put this on the screen right now. And there was something profound about this chart. So I went back from the 1970s to current, and I overlapped the Fed rate, mortgage rates, CPI, which is inflation, and then Case-Shiller, which is home appreciation across the U.S. So those 4 big factors that impact our livelihood, our jobs, the advice we give. And yes, you can see they all kind of like move with each other. So it's nothing crazy there. But what was profound is every time the Fed raised the Fed rate, so you saw a spike in the Fed rate rising, when that spike stopped and either leveled off or went back down, what you saw was a direct correlation that mortgage rates right after that fell. And so what have we seen right now? We got to bring this now to the current, the relevant. We've seen the Fed raise the Fed rate faster than they have in the history of the United States over the last year-ish, okay? 2 consecutive months now, they haven't raised the rate. Now here's the ... And this is why you do podcasts every single month. If we go another month or 2 without the Fed raising the Fed rate and they start to either stop or decrease, data doesn't lie. Statistics and analysis, it's all right there in front of us. It is that proverbial crystal ball, okay? So let's talk about that right now. When are rates going to come down? We don't know, because we're in the middle of this storm. When is it going to stop raining, weatherman? We don't know, but we know that it's going to stop raining
at some point.
At some point. There you go. So the best that we can do right now, Christian, is go off of data, what the economists are saying, what everyone's saying. Is it 2023? So we're in July of 2023 right now, just turned over July, okay? Economists are saying that we're going to weather this storm most likely for the rest of this year. So a lot of the economists that I trust and I follow are saying Q1, Q2 of 2024, we're going to see some decent relief in mortgage rates. Cool. Okay, now that we know that, let's focus on what's the housing market doing, like what you just talked about. It's appreciating at 6-ish%, okay, last year and this year. So
and that's nationwide.
Yeah. In Seattle with our inventory issues.
Like I just said, it went up $73,750 in
just
2 months.
2 months, okay? Yeah. So first-time home buyers, listen to this. If you know that the product that you want to buy is going to increase in price. So the thing about real estate, what impacts price is home value. And if you're financing it, you're financing costs, okay? Yeah. So we know those are kind of high and those are somewhat fixed right now. I don't really see rates getting much higher than they are right now. I think we've kind of crested that. I think they're going to level out in the 7s where we're at right now. And I think the worst is, I think we're going to stay in this storm right in the 7s. But, okay, so we know that rates are at 7, but we know that the values are going up. Okay, with this info, you need to take that info and go, okay, I want to buy a home. Financially, it makes more sense to buy now if the right home is there.
Yes.
So let's look for that. Yep. And then what I'm teaching all of my clients right now is you can always rework your mortgage.
Exactly.
You can't always go back. You can't ever go back and rebuy a house. No. Lock in your price right now because a year from now or so, you're going to talk about 6 to 10 to 12% higher cost for that house. Well, let's put that to paper. So if the numbers that I wrote up for this podcast are just, $950,000 purchase price.
Yep. And if you're listening on the podcast, we do have a YouTube version video of this, and we're having this on the screen so you can see it visually if that's how you learn. Otherwise, try to follow what Dan's saying.
We'll keep it super, super simple in regards to numbers. So you're going to buy a house right now, July of 2023, at $950,000. To keep the numbers round, I just used 10% down. You can buy with 5% down or 3% down, whatever. Yep. But let's just say 10% down. With your down payment plus your closing costs, you're right at about $100,000 for total cash due at closing. Okay, so that $950,000 purchase right now with private mortgage insurance, property taxes, everything included is about $6,600 a month, total monthly payment. Okay. So let's say you waited until sometime next year. Home values went up, like Christian just explained.
Let's say 6%?
6%, and that's what I used in the report. Okay. So that same house, you're going to buy for $1,070,000 sometime next year.
Okay, so from $950,000 to $1,070,000, so $120,000 increase.
So your down payment went up about $12,000 because of the price, but the total monthly payment by waiting to try to get a little bit better rate. So instead of you buying at a 7% 30-year fixed rate right now, this is not a quote. This is just a kind of an estimate used for a report. You'd be buying at $1,070,000, but your rate would be less at 5.5. So you're going to quote unquote try to time the market, which you and I both always say, never try to time the market. Yeah. With real estate, it's time in the market.
Exactly.
Okay? Get in and set it and forget it, right? Okay, that same scenario, by trying to time the market and outsmart the market, you save $10 a month.
So you have to pay $120,000 more for the house to save $10 a month, and you had to put $12,000 more down for your down payment. Yeah.
So doesn't make a whole lot of sense. Now here's where I come in and put all the numbers together. Instead of I've heard you talk with buyers. And this is what I respect so much about you and your team. I've heard you sit down and talk with buyers. You don't ever try to push someone into buying.
No, it doesn't make sense.
It doesn't make sense. Plus, you take the same approach I do. I'm in this with you for the long haul. I don't ever want to put
ready,
you.
Let's do it. Yeah.
We're in this together now and until the end. And so when it makes most sense for you financially, if you're pre-approved and if it makes sense compared to what you're paying in rent right now, buy now and just live in the house. Make the house your home. Okay, wait for the right time when rates do drop, whenever that might be. Like the economists might be right, and it might be next year. They might be wrong. It might be off for a year or two.
Yeah.
But we do know that rates at some point, from an economic standpoint, will drop. Let's say they drop a year and a half from now. A lot of them say that mortgage rates could be in the mid 4s to upper 4s. So if you were to refinance sometime down the road, but lock in your purchase right now at $950,000 and refinanced a 4.5 30-year fixed a year or so from now, your payment now went from $6,600 a month to $5,300 a month, a savings of, do the math, almost $1,400 a month.
Wow.
Okay.
Yeah.
So you locked in the right price.
Okay. So let me ask you this: how much does it cost to refinance, and how does that work? And is that a big?
Yeah, great question. So your costs to refinance are just like they are to purchase. Now, what New American Funding, the company that I work with, is doing with all of our clients is if you purchase with us, they're not charging any lender fees or appraisal fees on a refinance, saving you about $2,000 of your closing costs. The remaining closing costs is title and escrow and some government recording fees. So let's just say total costs to refinance are approximately $2,000 to $3,000.
Wow.
And most of our clients just roll those into the loan.
Yeah.
We are a servicer, so we don't have to have you reset your escrows, which could be about $4,000 or $5,000. You keep your escrows, your taxes and insurance in place. Pay for your title, pay for your escrow, recording fees. You're good to go. So
cool.
Yeah.
So it's not a big deal to refinance. You could buy at today's price. When rates go down, whenever that is, you could refinance. It's extremely inexpensive. It's almost free. It's not free, but it's pretty cheap.
Yep.
Way better than waiting 6 months or 12 months if you can afford right now, obviously. Don't buy just to buy because we said so. Do it if it makes sense for you. But instead of waiting for timing the market and trying to get a lower interest rate at that point, you're going to end up paying more for the house.
Yep.
You're going to have a larger down payment. You're going to pay a lot more for the property.
Yep.
And maybe you save a little bit on your payment, but it's not much. $10 in this scenario.
You got to think of it this way, you guys. I'm just a little mortgage dude in Seattle, right? And
You're so small, Dan.
Well, I mean, I'm not like a huge bank or a credit union, so you have to understand. You asked me earlier, do you have a buildup of people? Like people, I do. We have, so if normally we have approximately 15 to 20 people that are fully pre-approved out shopping for homes. And right now we have 2 or 3x that. Take that same data and apply it to the big banks and the credit unions and all the other mortgage guys and gals out there.
Tons of people out there.
Tons of buildup. So the second rates drop, you guys, what do you think all those people on the sidelines are going to do? So now your competition just went up.
This is what we've been telling and preaching at our Beers and Home Buying class is that once rates do drop, the market is going to be flooded with buyers. It's competitive right now. Like I just said, I gave that example last week. 7 offers, $200,000 over the asking price. What do you think is going to happen to that same house when rates drop to 5.5 or whatever it is? All of those people that are waiting for that are going to jump. Prices are going to escalate so fast. If you don't buy now, you are robbing yourself of all that appreciation.
100%.
That's huge. You could ride that wave of appreciation by buying sooner than later. And then refinance for $2,000 or whatever it is for you. $2,000 refinance when the prices or when interest rates do drop. It just financially, it often makes sense for people to buy sooner than later. Now, again, caveat, your situation might be different. If you have uncertain job activity or job security, I should say, don't buy. That doesn't make any sense. If you don't have enough of a down payment or you don't have any down payment, don't buy. If you're waiting for a family member to gift you some funds and they're not able to do that yet, don't buy. But if you can buy, at least talk with Dan, talk with me. We can help you understand and build that roadmap to see if it makes sense for you to buy. You choose when to buy. You're the one in the driver's seat. We're just giving you the data so you can make that informed decision. This is what we do all day, every day. If you do want to schedule a time to do that, it's totally free. We can do it via Zoom. I have on our calendar, on our website, a way that you can just quickly and easily schedule it. We call it a strategy session. It's, like I said, totally free. awesomenossum.com/schedule. You can do that right there. It links with everyone on my team's calendar so you can find a time that works for you. There's no pressure, no commitment, totally free. It doesn't hurt to do it. We talk with people all day, every day about the same exact topic. So happy to just help you answer your specific
We could take your scenario like what we do and plug it into this exact report in a community that you're looking at and give you really good, clear data on your scenario. So,
So, again, we did this podcast today because we've been answering these same questions over and over and over again over the last 6 to 12 months. If you now understand the same conversation that we've been having with everyone else and you're ready to potentially buy, like I said, just schedule a time to chat with us. It's totally free. awesomenossum.com/schedule. We will put that on the YouTube link right now. That's it for this episode. I hope that helped you. I hope that educated you. I hope that gave you the confidence to potentially move forward with the next step, which is just chatting with us. That's it. Thank you so much for listening. Thank you, Dan, so much for chatting with us. We'll see you in 2 weeks. Thanks for listening to this episode of the Awesome in Seattle podcast. See ya.